Ladies and gentlemen, my name is Martin Kjær Hansen. I'm Head of Investor Relations at ISS. It means that I have the great pleasure on an ongoing basis during the year to speak with a lot of our shareholders around the world, as well as analysts. On that basis, I'm also particularly happy welcoming you to our annual general meeting this year. I'd like to start with a brief safety moment. We have no fire drills planned for today and no other alarms planned either. So if the alarm goes, I kindly ask you to leave the room through one of the fire exits at either end of the building. Also, in the case of a need of a defibrillator, it's located next to the elevators just behind us out here. We will kick off the AGM of this year with a short video in a moment. The video highlights our legacy. It covers how ISS was founded in 1901 as a security company, and cleaning was actually only added to the portfolio in 1934, but it quickly became central to our DNA. Over the years, we spread into other service lines to become a global leader in integrated facility services as we are today. After 118 years, ISS continues to grow stronger each and every year. We will also set new milestones in 2019 as we enter and launch the largest contract in our history as we launch Deutsche Telekom. On this contract alone, we will employ more than 6,000 employees each and every day, and it will generate 4% growth to ISS group revenue as it launches. So with that, I'd like to kick off with the video.
These are your colleagues from the past, doing what we have always done, serving our customers for a better and safer day, helping our customers achieve their purpose while keeping people at heart. This is what has stood the test of time in the past and in the present. This is our legacy. Our history began in 1901. Drapery wholesaler Marius Hallgraf returned to Copenhagen after a trip to Cologne. Crime was rising in Europe, and he saw the potential of starting a security firm. Hallgraf was determined to follow his heart. He left the drapery business, and Copenhagen Frederiksberg Night Watch was founded. Customer sites were now kept safe by watchmen preventing water damage, fires, theft, and capturing runaway horses. In 1908, C.L. David became the chairman. For more than 50 years, he raised the bar for quality in people leadership. Very early on, he created instruction manuals and established a watchman's school. In 1934, we took an innovative leap. I have an idea. We're going to start a cleaning company, were the words of director Philip Sorensen. Work at our customer's site began 4 hours later than the last shift of the night watchman. Seizing the opportunity was the birth of integrated service. But it was a rough start. The Great Depression and the economic downturn was not an ideal environment for this innovative move. Contract cleaning was a new concept, and customers still trusted their own cleaning ladies. The cleaning company almost shut down before the adventure had even started. But we overcame the challenges with our strength, our people. One of the world's first human resource responsible was hired in 1940, Gerda Bull. She visited the female employees at home and work. She saw the need for more balance, and a welfare department was founded. The social status and health conditions of the cleaning ladies started to improve. Our people prospered, and so did our business.
Når vi I dag fejrer de første 50. år af vores virksomhedsbeståen, kan vi gøre det i bevidstheden om, at den gerning, som selskabernes medarbejdere, ofte under meget vanskelige forhold, er udført på en måde, som vi har lov til at føle en vis stolthed over. Men samtidig må vi gøre klart, at vi fortsat må arbejde for videre at udvikle den tjeneste, vi yder.
With CEO Paul Andreasen behind the wheel, the spirit of entrepreneurship was awakened in 1962. National boundaries couldn't stop us. With our expansion into new markets, we discovered different local needs. New solutions and new services were developed and became part of what in 1968 was named the International Service System.
Tranquility Base here. The Eagle has landed.
In the early 70s, an ISS Research Council was established. Scientific studies in technology, efficiency, and job satisfaction helped us develop new solutions and ways of working to benefit our customers. During the following decades, our expansion and growth continued, all the time continuing to keep our inherent focus on quality, innovation, and people management. By the millennium, the world was connected in new ways. We had become a worldwide company with more than 250,000 employees. Now our customers were looking for partnerships to help them achieve their purpose. ISS stepped up once again to close the gap. Our organization now offered one integrated model of facility management. Customers needed to trust only one company taking care of all services with a human touch. We were going to be that company. And so, our services grew, and our family expanded. Employees from more than 600 companies could now wear the ISS uniform with pride. With the ISS Way strategy in 2008, we got even more focused on our core services. We have to continuously think ahead, like we did in the past, to take another giant step, to become one global family and deliver the same service all over the world. No matter where our customers meet us. Now, take a good look again. When the night watchmen and the cleaning ladies changed to their working uniforms, they became part of something more than just themselves. Part of a company that was and is trusted. We have a strong legacy. We have a strong responsibility to come together, to collaborate, to be one. When the next generation look into each other's eyes and look down at their uniform, they will feel a part of something great. Part of the ISS legacy.
Good morning, ladies and gentlemen, shareholders. As Chairman of the Board of Directors, on behalf of ISS, it's a tremendous honour and pleasure to welcome you to this, our annual general meeting. I'd like to start by introducing you to the Board of Directors, as well as your Executive Group Management Board. They're all sitting here on stage, but I'd like to introduce them individually. Starting immediately on my left, may I introduce Henrik Poulsen, Thomas Berglund, your Deputy Chairman, Claire Chiang, Jeff Gravenhorst, your Chief Executive Officer, Pierre-François Riocalacci, the Chief Financial Officer, Cynthia Trudell, Ben Stevens, and our employee representatives, Pernille Bemberg, Joseph Nazareth, and Pally Franson-Quake. Finally, I'd like to introduce you to Niels Heering, who's a partner of the law firm Göransson Federspiel. Niels has been appointed the chairman of today's annual general meeting in accordance with section 5.8 of the Articles of Association. I'd now like to pass the meeting to Niels.
Thank you very much, and thank you for the appointment as chairman of today's meeting. And as such, I shall of course start to do my duty in making it certain that the general meeting is actually duly convened and in accordance with the Danish Companies Act and of course the Companies Articles of Association. As you have already noted and as mentioned in the notice to convene the general meeting will be held in English in accordance with the Article 5.6 of the Articles of Association. But there will be interpretation into Danish, and you can get the gizmo to have that if you need so. Also, if you want to, as shareholders, pose questions or comments to what's happening, you can do so either in English or Danish at your decision. As set out in section 5.4 of the Articles of Association, the general meeting has to be convened with at least 3 weeks and not more than 5 weeks notice by publishing a notice on the company's website. And furthermore, notice of the general meeting shall be sent to all shareholders recorded in the company's register of shareholders who have so requested. The notice to convene the general meeting was actually published on the company's website as well as through NASDAQ on 7th of March and sent to the so mentioned shareholders. The notice given and the forms of publication thus, in my view, comply with the Articles of Association. And also, in my view, the notice furthermore contains the information required by applicable law and the articles, and also the information regarding the general meeting required to be made available to the shareholders have indeed been made available on the company's website since the date of the notice on 7th of March. And that includes, of course, the notice itself with the agenda of the meeting. We come back to that. The registration form, proxy and vote by correspondence forms, and information regarding the number of shares. I come back to that. And the annual report for 2018, of course, which is on the agenda today. In accordance with section 5.1 of the Articles of Association, the meeting is held here in the capital region of Denmark. And in light of this, I consider the annual general meeting to be lawfully convened unless, of course, there are objections from the floor. And that is not the case. We can continue also to look at the quorum for the general meeting. And the agenda of today's general meeting, as presented in the notice, only contains the agenda items in the standard agenda outlined in the articles. So no proposal have been submitted by the board of directors or shareholders for approval outside of these standard items. So all in all agenda items can be passed by a simple majority. I think now it's time to present the general meeting, and unless there are, of course, objections to what I'm going to conclude, that the general meeting is also able to transact any business on the agenda, and that is the case. So there's no comment to that. I can also just give you an information as to the share capital represented on the general meeting. I just got that a few minutes ago. And although we are not that many people in the room, it's actually a turnout of just above 61% of the shares of the company that are presented here today, one way or the other. And another service information, which is also stated in the notice, the report on the company's activities by the chairman of the board and the group's CEO will be recorded and webcast and made available on the company's website following the general meeting for those 39% of shareholders who are not able to be here today. Also, a more practical issue before we go to the agenda. If we need to have a vote on any proposal, we will use the Lumi AGM voting app, on your mobile device, and it should have been given to you, and you should have been instructed when you arrived at the meeting out here. And that's the only way we will vote if we need to vote. To be able to just ascertain that it actually works, we have a short trial on this. So if we can take the next slide. This is how it looks, and you should be ready because I will give you a test in a few minutes. First of all, if we skip one, yeah, that's fine. You have 3 options that will come up in a moment when I start the voting. You can either vote for, which means depending on the question, it's for or yes. And you can vote against, press against, and it will be, of course, against or no, or withheld or abstain, which can also mean do not know. So this is the choices, and we can then present the question we have. And we looked at it again this morning to make sure, but the question is Theresa May Prime Minister of the UK? And you can either, when you now touch it, when I start the voting, and I can say I start that now, so you can see that it works. So if you touch your screen, you will have, I very much hope, for, against, or withheld. So either yes, no, or I don't know. So I will start the voting now. I hope it's not too complicated. It's not. Good. So you press whatever you think is the right answer, and if you do it wrongly, you can do it again. So please try to press a button, because I will only give it a few more seconds. And we'll stop the voting now. And if it all works, I should then get the results up here behind me. It does work. So as you see, it's morning, but you're all awake. So most people have voted yes for, which is actually the correct. So far, it's the correct answer. So fine. Okay, it works, so we can continue. And what I will do now is take you through briefly the agenda. Of course, there will be time for each of the items on the agenda. But item number one is the Board of Directors' report on the company's activities in the past financial year. And 2 is adoption of the annual report for 2018. And 3, distribution of profit according to the adopted annual report. And 4 is then resolution to grant discharge of liability to the members of the Board of Directors and the Executive Group Management Board. Then item number 5 is concerning authorization to the board to acquire treasury shares. And 6 is approval of the remuneration to the Board of Directors for the current financial year. 7, election of members to the Board of Directors. And 8 is election of the auditors. And 9 is, as always, any other business. And as it has become a tradition by now at the annual general meeting of ISS, it is proposed also that we present items 1 to 4 is presented together, so that the report of the Board of Directors and the annual report, including the proposal of the distribution of profit, are presented together. This means in sort of real life that the chairman of the Board of Directors, Lord Alan of Kensington, together with the Group CEO, Jeff Gravenhurst, will present the Board of Directors report and the key figures of 2018, as well as the group's strategy and business. And following those presentations, it will be possible to ask questions or comment on the presentations. And any shareholder who wants to take the floor, I kindly ask to come up to the podium and give me your name on a card or some other form, so we can have that probably recorded. And following the debate, I will return to the formal adoption of the resolutions under first items 1 to 4 on the agenda, of course. Are there any comments to this way of procedure? And if not, I will hereby pass the floor back to the chairman of the Board of Directors, Lord Alan of Kensington, who then in turn will pass the floor on to Jeff Gravenhurst, the Group CEO. There you are.
Niels, thank you very much. On the voting, it's really good to see that the ISS shareholders are more decisive than the UK Parliament, so maybe we should have you helping us with our voting. Ladies and gentlemen, let me start by reminding you of ISS's vision. We're going to be the world's greatest service organisation. And this may seem a very lofty ambition, but let me reassure you that this is a very, very serious objective. We strive to honour our values and instil them in all of our people around the world. That's honesty, responsibility, quality, entrepreneurship, and leadership principles. Our business model is built on self-delivery, and as such, the behaviour and attitudes of each and every one of our colleagues are central to what we do for our customers. That's service with a human touch. To achieve our vision, we must meet our customers' needs. Our impact on their working community is becoming greater. This is aligned with what our customers want. They want engaging, environmentally friendly, and efficient workplaces. As you saw from the film, from our origins as a provider of single service, soft FM solutions, we've built a full suite of integrated facility services with a heavy emphasis, as I said, on self-delivery. While facility services will remain core, it's just part of the offering we give our customers today. Today, our value proposition is to key account customers, big global customers around the world. Excuse me. And it doesn't just cover their property, but more importantly, their environment and the engagement of their people. Turning to shareholders. ISS has a broad shareholder structure. Our largest shareholder, Kirkby, who I'm delighted is with us here today, has been a major shareholder since 2012 and has, during the last year, reaffirmed its commitment with an increase in the shareholding from 13% to 15%. Mondrian increased their shareholding from 5.25% in May 2018. The rest of ISS is owned by investors all around the world, mainly from Europe and North America, including more than 20,000 retail shareholders, predominantly here in Denmark. And that's an increase of 4,000, quite a significant vote of confidence over the last 12 months. So very strong support from our retail shareholders. During 2018, we maintained an active dialogue with the investment community through our quarterly calls, our results announcements, our investment conference calls, roadshows, and the updated strategy meeting in December. 2018 was a challenging year for ISS, albeit that we delivered on all of our outlook KPIs that we set out at the beginning of the year, and that's growth, margin, and cash conversion. Whilst, as you can see from the chart, the share price was flat compared to last year, the market showed similar trends, both when you look at the Danish C25 and our industry peers. Our 2018 results enabled us to propose another year of solid ordinary dividends at 7.70 DKK per share. And in connection with our strategy update in December, we committed to pay 50% of net profits, or at least 7.70 DKK per share for 2019 and 2020. Further, we'll be paying out at least 25% of the net proceeds from our divestment programme, either in the form of a share buyback or an extraordinary dividend. I'd now like to cover governance in more detail. Corporate governance, as well as our focus on social and environmental aspects, is absolutely central to what we do at ISS. And as you can see from the chart, we're widely recognised for these results. In 2018, ISS was again named, amongst others, best in class on corporate governance and was named industry leader on health and safety by MSCI, and similarly named industry leader by Sustainalytics. As a result of our performance, ISS remains among approximately 100 companies globally to be included in all 3 sustainability and governance indices. That's Dow Jones, MSCI, and stocks. ISS's corporate governance policies and procedures are based on key principles: transparency, a constructive shareholder dialogue, and sound decision-making processes and controls. It's really important that we exercise sound corporate governance practices and comply with statutory requirements and the Danish corporate governance recommendations. The ISS corporate governance framework is reviewed regularly by your board of directors. And at the end of 2018, we complied with all 47 of the Danish corporate governance recommendations. ISS remains committed to selecting the best candidates with regard to board and executive management nominations. We're also really committed to diversity, and diversity in its broadest terms, including gender, age, new talent, range of international experience, which in the boardroom brings an invaluable and different aspects of thinking to the board discussions. At ISS, we are confident that diversity is a key competitive advantage. This goes for all of our workforce as well as the board of directors. As you can see, ISS has a very diverse board. 33% of the board of directors are women, and we've set ourselves a target of reaching at least 40% of women on the board by 2020. In addition, we have 5 nationalities represented by the 6 independent board directors that are here today, and 6 nationalities among the 9 board members. In line with good governance, in 2018, the board carried out a board evaluation with the support of an external consultant. And we do this every second year to get an external view of the work of the board. The process consisted of a number of factors. Firstly, an extensive questionnaire covering the board's range of issues that we discuss, such as governance, the meeting processes, the composition of the board, the strategy, the performance, and an engagement between the board and the executive management. Secondly, one-to-one sessions between the consultant and the board of directors, and group CEO and group CFO were held. We had the consultants observe how we operate in the board. And then there was one-to-one sessions between myself and each board directors where their individual performance was also discussed. Finally, we had a presentation by the external consultant on the outcome of the evaluation and a discussion with the board, particularly focusing on agreed actions to ensure that we have continuous improvement on our efficiency. The overall outcome for 2018 board evaluation was a very high level of performance and furthermore overall improvement and good progress on all the matters that we looked at and compared to 2017. A key finding was a significant level of trust and alignment and commitment of all of the board of directors. The collaboration and engagement between the executive management and the board had strengthened further in 2018. The quality and efficiency of the board meetings also increased, with more time allocated to discussion and with improved balance between strategy and operations, and strong alignment on our strategic priorities. Looking forward, the board agreed to focus on a number of things. Firstly, continuing to strengthen the board and executive succession processes, including review of competencies required for future board members, review of how to strengthen diversity at management levels, continued improvement on board meetings, quality and efficiency, and to ensure that we're always looking outside the company rather than looking inside, have external speakers that come and talk to the board with issues and topics that are relevant to ISS. Turning to remuneration. The remuneration elements for ISS's Executive Group Management Board are in line with the remuneration policy, and they're summarised here on this table. The annual bonus is determined by both financial and non-financial performance measures, including employee engagement, customer experience, and of course the all-important health and safety. The long-term incentive programme is granted as performance share units, or PSUs. And the PSUs vest after 3 years, subject to performance conditions on earnings per share and total shareholder return relative to both industry peers and the Copenhagen Stock Exchange Index OMX C25. The long-term incentive programme and the performance conditions are in line with market best practice. On the back of the strategy update in December, we're also introducing an accelerated growth award to incentivise the accelerated strategy on execution for selected key leaders. The award is granted as PSUs and will vest in March 2020, subject to the achievement of performance criteria on our continuing operations in 2019. In addition, a bonus to the Group CFO was awarded for retention purposes. Turning to the board, it's proposed to adjust the 2019 remuneration at board level of directors by approximately 2.4%. And we believe that these proposed fees are in line with the market standard and that the increase broadly reflects general wage inflation. Just to remind you, the board does not participate in any incentive schemes or receive any variable remuneration, except for employee board members as part of their remuneration. In total, the remuneration of the Board of Directors for the year in 2018 was DKK 8.8 million. The remuneration of the Board of Directors and the Executive Group Management Board is in compliance with the remuneration policy last approved at the annual general meeting here in 2018. Before I round off, I'd like to take the opportunity to thank Pernille Bemberg and Pally Fransen-Koek, who will step down after this AGM, for their great work as employee representatives on the Board of Directors since 2010 and 2011. It's been an absolute pleasure to work with both of them, and I'm pleased to say that Joseph Nazareth has been re-elected for another 4-year term. At the same time, I'd like you to give a very warm welcome to our 2 new employee representatives. So I'd kindly ask LCU, Regional Legal Business Partner for APAC, and Nada El-Bouyadi, Head of Global Big Data, to stand up. Welcome. Elsa and Nadi will join the Board of Directors following the annual general meeting today and have been elected for a term of 4 years. I'm also happy to say that, that the diversity within the board has improved with 2 lady directors coming on from our employees, and it basically also enhances our nationality and gender perspective. So, in summary, 2018 has been a solid year for ISS, and we delivered in line all our KPIs in line with guidance. And in line with the strategy update in December, we're accelerating the strategy execution, committed to delivering industry-leading organic growth of 4 to 6%, up from 2.9% in 2017 and 3.9% in 2018. Let me extend a warm thank you to all of our stakeholders for the support during this year. You, our shareholders, our customers, our partners, our suppliers, and most of all of our colleagues around the world for their tremendous effort and contribution, literally day in, day out around the world. With this, I'd like to hand the floor to your Group CEO, Jeff Gravenhorst.
So thank you, Charles, and good morning, everyone, also from my side. As you saw in the movie that we showed this earlier today, ISS began the journey in 1901, almost to the date. That means 118 years old. And as also depicted in the movie, we've gone through a number of major significant transformations on the way. Of course, starting with the whole journey from the security business until today, a leading service provider with a clear picture of who we are today, but also with a clear vision of who we want to become within the near future. In that quest, all the way through these 118 years, we've made choices. We made choices all along, some of them very bold indeed. One, as I said, just to go from into the security business, then from security into cleaning, which, as you also saw in 1934, might not have been the best timing of all timings. Nevertheless, we conquered it, we went through it, and we became obviously known as the world's largest cleaning company. We still are, by the way, and we are still very proud of that part of our business. But we still have moved on because the customers are moving on. So over the last years, we moved from being a predominantly cleaning business, single service business, we've entered into building up the integrated facility services offering, where many services can be delivered by one supplier. And lately, we've decided to focus even further on the key account sector. So when we look at the endeavors that we had over the last few years to become the world's largest or the world's greatest service organization, it is about what capabilities are we capable of delivering to our clients. As I said, following the customer's needs, it's all about building a differentiated platform. The differentiated platform was really the focus from 2008 to 2013, where we really integrated the businesses that we made. You may have noticed there were 600 acquisitions. The 600 acquisitions gave us the capability of delivering the reception services that you saw this morning, the catering services, food services that you hopefully just experienced next door, but also the whole technical setup of what we have in this room right now, including the HVAC, the lights, the building maintenance, everything that goes to run this building. And then, of course, making sure it's clean and safe as we are here all day. These are the services that we do today. We also manage, on top of that, we manage the delivery of those services. But as Charles was saying, even more so, we get more and more involved with how do we work in a workplace? How do we, what are the workflows or the people flows in airports? People flows in hospitals? This is some of our expertise today that we can advise and implement new ways of working, new ways of flowing with people through organizations, and of course, improving the workspaces, people spaces. That's what we've been building up till 2013. Now, at the same time, we were building that up to be able to do it not just in Copenhagen, but across the European zone, and even further than that, across the world. This now enabled us to make sure that we could do this for clients across the entire world. So in this period of up to 13, we have some of the first global accounts. HP is one of the ones that was the first global key accounts. Then in 2014 to 2018, we started to sharpen our focus even further. This is an area that we believe in. We believe in the fact that we can deliver better services when you have a more profound relationship with fewer clients, i.e. being more for less than a lot to many everywhere. Making sure that we can actually get some payback on our investments, that we are with the clients for more than just 1 year, but we're there for 5 years, 10 years, or even, as for Nordea, we've gone past the 40 years mark already. The same we have with the Danish States Bank, DSB. With that means we can make investments, not just in people, but in technology and in processes that, of course, will enable us to deliver better services and better value to our clients. That gives us opportunity for better growth, gives us better opportunity for better margins, and thereby returns to all of us. That has been the focus from 14 to 18, where we started to divest a few of the services that did not belong to this. And as you might recall, I've said this many times now, but it include some route-based services. So we used to do damage control in Denmark, for example. We used to do damage control in Germany. This is where we would go in and clean up after fires. This part of the business is a business where you have to wait for the fire to happen. You need to be ready for these events, where our normal business, our key business, is about being on site every day, doing services for the same client day in and day out. Two very different value propositions. So today, we are focusing on key accounts and on-site services all the services that you experienced, as I said, as you come into the building and as you leave the building today. So the last stint of the way, or the last sprint, is over 1920. We will realize that dream of saying, if this is the right way to go, then let's finish that journey, and that's the focus for 19 and 20. Really making sure that we take benefit of being a key account provider for throughout the world. This will enable us to be a more focused business, harvesting on the benefits given by the global accounts, where our global accounts and regional accounts and national accounts, where our customers are looking to have fewer suppliers to help them to have a solid delivery of services. That is a growth that can generate midterm 4 to 6% organic growth. It is also a business where we can see stable margins that will come through over the years after restructuring costs of 5.5% margin, and that will generate and continue to generate strong cash flow, particularly because we are still a people business, a business with people at our heart, but also that means even though we invest more into technology, we will continue to be capital light, and with this generate up to the 3 billion, probably also beyond once we get to the vision of 2021, but 3 billion kroner worth of free cash flow in the business. So that's the whole aim, that's the purpose of trying, of making us even more customer focused. Then you can argue, why is that? And of course, I've already said that the focus is we need to focus more. Now, behind all of the numbers that you see every year, you will see different types of businesses. So in the old business reported in 2017, before the last divestment part, we had around 55% of our business that sat within the key account businesses. Now, that part of our business outgrew the rest of the business quite significantly. So if you look up in the upper left corner here, you can see the key account organic growth versus the rest of the business. So in 16, our key accounts grew 5%, where the rest of the business grew 2%. In 17, 4.2 versus 1. 5.5% growth last year, in a year where you remember we lost part of HP. Even in that year, we grew organically 5.5% on the key accounts part. This part of the business is where we can be much more focused on delivering value to our clients, risk mitigations for our clients, and an even better workplace space environment, with being in airports, hospitals, what have you, across the world. Today, we now have, after the divestment, this now represents 60% of our business, significantly outgrowing the rest of it. This also represents good, stable, higher margin opportunities as we can address the 1,000 key accounts that is represented in this key account market in a much more systematic and process-led, technology-supported manner. This is the reason why we believe the more we get the business to key account, the more that growth and income on the net bottom line will also shine through on the consolidated numbers, not being hampered by businesses that does not give value to our overall vision. Now, with that in mind, we took some bold decisions in December last year. So we decided to say, okay, which part of our business do not actually contribute? Where is the risk environment, or the risk safety, where is the value added of having fewer suppliers to make sure that we deliver a compliant product to our customers, a consistent product day in and day out, a transparent product that is at very competitive pricing, and where we can live up to support our business to becoming a better hospital by focusing on lowering cross-contamination in a hospital. Surely, this is something that is within our core. The same is we can focus on the nutrition for the patients, but be even better. Focus on what food do we serve in the hospitals, at what time during the day do we serve it. Not just at 4 or 5 o'clock in the afternoon, as my mother had to go through it also when she was in the hospital. You're not hungry necessarily at 4 to 5. You need to have this in this way. It's quite important where we can support in the healing of patients, both from a hygienic and a nutrition perspective. When we look at our portfolio of countries, there are some that just doesn't make the same sense anymore. With this strategy, this is not what we can see that some of these countries will take us. So when we make a choice to be better at something, you also have to make a choice or where you will not be the world's greatest. And if you make a choice of not being the world's greatest somewhere, then please, for everybody involved, make the choice of stepping out and let somebody else who's a better owner run that part of the business. So that's the decision we made. We're selling off 13 countries that will go to other owners who has a different focus in Latin America than we have. That means our employees and our customers will be in better hands because our investments will not go towards these areas. They will go towards key accounts in the 31 countries that we still have with us. That is a consequence of our choices. This is not a new strategy. This is an acceleration of saying what we have been focusing on for a long time is coming through positively. But I also have to admit that the growth on the top line, it's not really showing it because we have something that's hampering our growth and hampering our results on the bottom line. So the decision here is to say, let's be very clear. This is who we are, this is what we're going to do, and that will make a much clearer picture as we go forward. The one thing we have to remember in this is we are still committed to deliver facility services across the globe to our global key accounts. Our global key accounts presence, though, in the countries that you see here, is not that big. But we will still be able to deliver for the major sites with our own staff on site, also for the global key accounts going forward. It is a major part of our strategy. It will remain a major part of our strategy. So with this, we will sell off around 9.7 billion kroner worth of revenue, 12% of the top line. We're well on the way to do this. The capital that we will get from this means we will get some money to invest into the other part of the business. Those investments will go into people development, training on the 1,000 key accounts predominantly. It will go into technology that we can use to support the way we deliver our services on a daily basis. And of course, it will go into investments into processes, making us even better at delivering the value proposition to our chosen customer segments. But it is money that, of course, also belongs to the shareholders. So if we cannot see very value accretive ways of investing this capital that comes in, then of course we will return it to the shareholders, as we've also done in the past, in the likes of dividends, but also with extraordinary returns. And we have committed that out of these disposals proceeds, we will return 25% of those over the period of this transaction. Now, what does this mean? This means, of course, that we'll have a much simpler business going forward. It's still big numbers. We're still a business with 400,000 employees, but we will have an increase of revenue per customer of 74%. 74% higher revenue per customer. Our focus is on the key accounts, the 1,000 of them right now. It is much easier for us to implement new ways of working on 1,000 accounts than it is on the 125,000 accounts. It's much easier for us to have engaged environment for our employees on 1,000 accounts where we can offer good career opportunities for our staff, colleagues on site, as opposed to scattered throughout nations, where it's very hard to give alternative job options to our colleagues. This is why we're doing what we're doing. It's value added to our employees, it's value added to our customers, and it will be value added to our shareholders. So 10% more revenue per customer, 24% more revenue per country on average, meaning we get much more focused, and 60% of our business growing at a 4-6% every year is what we will see come through as key account. That will generate this market-leading growth opportunities, midterm of 4-6%. And as you know, and we already said, already for this year, we think it's going to be a little bit higher than this. But you heard it this morning, everything in ISS is about people. Yes, today it's also about technology, it's also about processes. But we are a people business, people at our heart. Services is not good if it's not serviced with a smile. Service is not good if it's not serviced by engaged employees. And our customers will feel that. So in our company, the employees are, of course, our utmost important asset. We work with this diligently. The fact that we need to make sure that we can go home safe every day. It's not okay if you jeopardize your health and well-being by going to work. So we're very focused on this. We've been focused on this for a long period of time. And since 2013, our lost time frequency incident, that means how many injuries have we had out of 1 million hours at work during a year? 2.3 times, or 2.9 times, sorry, in 2018. That started at 13 in 2013. So 74% increases or improvement on that number. That means a significant job, significant actions have been made to make sure that our workplace is more safe than it was before, and definitely we're now within industry-leading indexes of 2.9. We should go going to 0, but this means that anybody get injured that's not working a full day or full shift the day after. That's 2.9 times out of 1 million hours. That means 2.9 incidents out of 500 employees. Is that good or bad? It's too high. We still continue to work on that. With this, customers' employee satisfaction is the next thing. We work very hard, service with the human touch, leading with the human touch, programs that goes across the entire world. And as we become more and more key account focused, this actually is coming through. If you have a very high customer employee satisfaction, 50 is known as being world class. We're still sitting at around 60, which I'm very, very proud of. Across 500,000 employees, this is. This, of course, in turn, will also, with the better focus on customers and the more engaged employees, will lead to customer satisfaction. And lo and behold, our customer satisfaction, again this year, has increased quite significantly, almost 10%. So again, very happy with the customer satisfaction part. So we're very happy with the development in our employee engagement, with our customer engagement. But we also need to understand that with people at our heart, diversity is very key to us. Diversity is the sheer nature of who we are. We speak 130 different kind of languages in ISS. But in Denmark alone, we sit around 118, 120 languages. And that's not only in Denmark. This is by country that we talk a lot of different languages. This, we believe, is a strength. Diversity gives you the opportunity to look at problem solving from many different angles, and inclusive for that matter as well, also being a very important part of integration in any environment, any country across the world. On the gender diversity, overall, we're not doing okay. There are some areas which we can say is fine. We got 50% male, 50% female in the business. A third of our board members are female. We have a commitment to be 40% next year. So we've hit the targets next year. Obviously, over time, this should of course be more close to 50-50, but right now the target is 40. What we have though is that in the management team, the top management team, my management team, we only have 10% female representation. We need to work hard on that. We are working hard on that. That means in our senior leadership team, now it's 17% that's represented by female. And in our global leadership conferences, where we have 400 people represented every year, that's where we feed in to the senior leadership team. That feeds into our EGM team. There we have 30% women representation this year at our global conference. We continue to work hard through a diversity committee in this. Our management trainees, we've got 200 management trainees in ISS globally. 50% in the latest intake is women. It sits around the 45 to 50% overall. On leadership mastery, that means all of the leaders that is expected to move in to the senior leadership team. That goes through the same education every year. We have around 45% representation this year in the intake. That came from 20 in 2018. The recruitment policy is that on any shortlist for any major job, there will be at least one female candidate out of 3. This has led to the fact that last year, 60% of our external hires were female. And that, of course, comes from the fact that we have a focus on improving this. Looking through our financial highlights, I'm first and foremost pleased to say that overall, we are within the commercial operational targets that we set at the beginning of the year. It's not without some mixed bag, but that is overall in line with our guidance. A 3.4% growth at the upper end of our target, 5.53% on the margin side, is within the target of margin of 5.6 plus minus 10 basis points, albeit at the lower end of the target. Cash conversion sits nicely above the 90%. So overall, we could be pleased. I have to say the margin is on the lower side. Looking into the regions, continental Europe particularly performed extremely well. A 6% organic growth over a 4% organic growth the year before. Also, the region of Asia Pacific fueled the organic growth, so 6% in Asia Pacific. This is driven by Hong Kong, by Australia. In continental Europe, it's predominantly within Germany and Turkey, and also a number of other Central European countries contributed well to the growth. From a margin perspective, we saw solid margins in both continental Europe, Northern Europe, and Asia Pacific, albeit that Asia Pacific is a little bit down year over year, actually 1 percentage point, mainly as a normalization of our earnings in Singapore, which sat at a very high level the year before. So the drag on our margin is the North American part, both from a growth and a margin perspective. From a growth perspective, though, and a margin perspective, the success story in North America has been our acquisition of Guggenheimer, the food services business we bought in May 2017. We've had a more than 20% organic growth within this, and again, this is the focus on key accounts. We were hampered a little bit by the HP account going out, so that's why the organic growth ended up consolidated at 1%, but very happy with the performance of our acquisition. 3.7% improvement over the year before, fueled by the synergies from our acquisition also in North America. So we will continue our quest in North America to become more and more key account led, which of course gradually will improve both the growth and the margin numbers. The detailed P&L, obviously you have it in the annual account. Just to highlight, the top line is pretty much flat, though, albeit that we grew 3.5% organically. The problem we had was currency. It's a translation risk, obviously, that the pound has become worth less over the year. So the currency ate up the whole organic growth. So we end up with exactly the same revenue on the top line. That's a pity. You will see that the currency probably will do a little bit better this year, but will nevertheless in 2017-18, that was the impact. From a bottom line perspective, exactly the same thing. We have impact from the currency part, but the drop from 2 billion on the net bottom line to 300 million is purely as a result of the accounting impact of the divestments that we've done and we are waiting to do in the years to come. When you put a business to sale, you need to take the impairment right now. You cannot take any gains until you actually sold them. So the ones where we'll see gains will come over the years. Where we had to take an impairment, it happened in 2017. That cost us 1.7 billion. It is non-cash, but nevertheless, it hurts the profit and loss. From a profit before an operating profit perspective, we're a little bit down year over year. Again, that is mainly driven by investments into the restructuring of 168 million. Cash flow-wise, on the cash flow from operations, 129 million less than the year before, mainly again driven by the currencies impact. But also when we go to the net cash flow from operating activities, minus 266 million, this is because we're investing heavily into the startup of the Deutsche Telekom contract that will start on the 3rd of July this year. So these are investments, of course, in future incomes, which I'm quite okay with. We're looking forward to starting the contract on the 1st of July. Overall, in line with the expectations apart from that. The strong commercial momentum, we can see we came through a year where we were very good at retaining contracts. So this list is the list of all accounts that has a revenue higher than 0.1% of our group. And as you can see, we won a lot, retained a lot of contracts, and we have lost no contract, which has an impact within 2019. So very happy with this development. More so, if you look at the pie chart, we also have a strong focus on where we focus our growth endeavors, and the growth is very segmented in key account. So focus is on business services and IT, manufacturing, particularly with pharma industry, technology industry, the healthcare industry. So all of our growth, as you can see it, falls in within the chosen segments, which is part of our future. So happy with the commercial development, gives us a strong start of this year, and also helps us when it comes to the outlook in a moment from a growth perspective. Definitely very good, long, strong list of retention and wins, and very, very few losses in the year last year. That leads me to the outlook for 2019. And with this ongoing strong commercial momentum, annualizing of a few of the large contracts in the large contract losses we had last year, and the launch of Deutsche Telekom in July, we are set to deliver 5 to 7% organic growth in 2019, so above the midterm target, and happy with that. The operating margin is expected to be between 5.0 and 5.2. This is including restructuring costs. These are run rate improvements that will more than offset the one-off incomes that we had in 2018, and also the investments that we'll do into our transformational projects. Looking past 2019, we expect to see margins improve even further, up to the around 5.5%, which are presented as the midterm targets also. Finally, we expect the reported free cash flow to between 1.8 to 2.2 billion kroner for the year, including some significant non-recurring items. And in the midterm, we expect to reach around 3 billion Danish kroner in free cash flow up to the midterm timing. So with this was the quick overview of the performance of 2019 for ISS. Relatively pleased, still work to be done on streamlining the business towards the key account and improving our margins and generating an industry-leading growth of 46% in the midterm. With this, I would like to hand over to Nasiri. Thank you.